Hi, Snehal. Good morning.
Hi, good morning.
Hi, how are you?
I'm good, thanks. How are you?
I'm good. I'm good. Very excited for this session because this will be our first live market session,
Yeah.
and hopefully many more coming forward as well.
Mhm. Okay. Can you? Okay. My camera. I'm using my monitor.
Okay,
So let me share my screen quickly and let me know if you can the portion of the screen etc. is okay. So that
sure, sure. Yes,
it looks fine, right?
yes. It is clearly visible.
Perfect, perfect. Because last time I was using my laptop because the screen proportion maybe resolution was not correct.
Right. Okay, so we'll just wait around for 5-10 minutes.
Yeah, yeah,
Right.
sure.
Hi Nikhil, hi Ram. We'll be just starting the session in 5 minutes.
Good morning. So I'll preferably keep myself on mute as I'm also a full-time trader and might be having some things in mind. I'll be eagerly waiting to see how Snehal sir explains things.
Great, great. Yeah. You can always drop your queries in the chat box and we'll pick this up after this
Sure.
session.
If anything is there, that will be taken care.
Good.
Okay, so the market has opened. Let me share
Yes.
the screen.
Yeah.
Second. This way. Yeah. So yes, let's reset the chart. So market has opened gap down. So for someone who is new, this is
Right.
the order flow chart that we are looking at. We are using the Go charting platform, but there are other platforms also available that can be used. So I am personally using this platform. That's why we are using this platform for the live trading. I don't know how many of you were there in the last session. So what I'll do is I'll start with some of the concepts that we had gone through in the last session, and then we'll take it up from there. So what you are seeing on the screen is the chart of order flow, wherein you are seeing on the left side the total number of orders for sell that are executed. On the right side, you are seeing the orders of buying that are executed. So it's basically showing us the picture how many orders are executed at this point in time in live market. Okay, this this is a 3-minute chart, but we can update it to a different time frame as well. For example, we can go to, if we want to see a granular picture, we can go to a 1-minute chart as well. That will show us what is happening at a 1-minute chart. We can see here the sellers and buyers, they are interacting with each other. The matching of orders is happening, how the orders are being placed in the market and how they are executed. So the question for everyone who has joined so far, what do generally retail trader look for in the market? If you can just drop it a chat message. What do retail traders look for in the market? Anyone? Okay. So retail traders generally look for a holy grail in the market that will print them unlimited money. And that is practically not possible. What retail trader instead can find out from the market is the edge that gives them a confidence in their trades, and they can be a disciplined trader. That's what order flow is all about. It's an edge in the market. It's not a holy grail that all your trades will be profitable. But you can look at the evidence and take trades based on evidence. So order flow is like using evidence to take your trades so that your trades go wrong less. Okay. So yeah, we are looking at 1 minute chart right now. I'll move again to the 3-minute chart. I'll zoom in a bit so you can see the picture clearly. So what is happening in the market right now? It's kind of a sideways as of now. The market has opened around 23,196 and it's hovering around 23,200. Now 200 is a psychological level. So we have to see if the market sustains over 23,200 or not. But does the participants reject from 23,200? So it depends on number of buyers and sellers in the market. This is an imbalance chart that we are looking at, which basically shows you how many orders are there and where is the imbalance. So if you look at this yellow color in the chart, it shows a number called 23,000, 23K, which is like 23,000 quantity of orders that have been executed in the market. Now it has turned into green. So whenever you see this, there is a setting for imbalance chart, and this setting I have marked it in such a way that what you're looking at in the yellow is the actual imbalance. What is imbalance? Imbalance is when there is an opposite party. For example, let's say in this case, there are more number of sellers than the number of buyers in this at this particular price. So around 23,170. So let's say this is closer to 23,150. So at 23,150, there are more sellers than buyers. And how do we identify imbalance? What is actually imbalance in the order flow chart? So imbalance is basically you are identifying that the number of sellers are let's say 2x or 3x of the number of buyers. If we talk about this particular imbalance, we have to match it diagonally. So when why we have to match it diagonally, I'll show you it in a moment. So this is on the right side, you are seeing the order book, or you can say depth of market. So this depth of market is specifically tied to a broker. Right now, I'm using Dhan for the order book. So I'm seeing the order book of Dhan. So specifically in Dhan, how many users are placing orders at what prices? That's what we are able to see. And this is a very basic data for any instrument in the financial market. For example, stocks. If you're taking Reliance for an example, if you go to Reliance and you open the depth of market, you'll see similar picture for Reliance. For index, we are looking at the future instrument instead of the Nifty, because if we go to Nifty, Nifty doesn't have a volume of its own. So if I open a Nifty chart, you're seeing nothing here on the depth of market. You're just seeing the candles that are being updated. You don't see imbalance charts as well. Because Nifty doesn't have volume of its own, but Nifty futures has its volume, and based on that, we can take trades in Nifty options. So I'll move again to the Nifty futures chart, and now you can see the volume on the right side. I'll increase this size to, let's say, 30. We are seeing the price is hovering around 23,200. These are the number of orders that are placed at limit. And on the chart, what we are seeing are the executed order. So I'll come back to imbalance again. What is imbalance? So imbalance is how many and why are we? So I'll come back to the point that why do we have to match the orders diagonally? So 11,000 against 92,000, 37,000 against 9.7,000. So why do we have to cross match the order diagonally? Because on the order book as well, there is a bid side and there is an ask side. So bid size is number of the limit orders on the buy side. Ask is number of orders on the selling side, and they are matched diagonally. So you, when you look at the depth of market, there will be a spread between bid and ask. So bid will be, let's say, 23 to 11. In that case, the ask can be 23 to 12. So it depends on the spread. So at what price the seller wants to sell the instrument, and at what price the buyer wants to buy the instrument. So there is a difference between them, which is called a spread. So and that is happening diagonally, because the sellers will always want to have a higher price and buyer want to buy at a lower price. So there will be a diagonal matching of the orders. And similarly, when we look at the order flow chart, we are identifying the imbalance diagonally. So why this is marked as in yellow? Because the number of sellers that are there, number of buyers executed buy orders that are there are 9.7 thousand, whereas the number of sell orders that have been executed are 37,000, which is like almost 4 times more than the number of buy orders that are executed. So right now, when we look at the imbalance, most of the imbalance that we are looking is on the, so here, if we look at the first candle, the imbalance is on the left side. So sellers are dominating in this candle. If we go towards the right, there is a single imbalance, which is on the buyer side. Again, we move to the next candle. There is an imbalance on the selling side, as well as imbalance on the buying side. So right now, it's like indecision in the market, what they want to do. There's no clear picture which direction the market is going to go. Now, we will go to a little advanced concept, which was not taken in the last session, which is a market profile and how to identify key levels based on the previous execution of the trades. So what I'll do is I'll change the chart to a market profile, and we will mark the levels, key levels that we can watch out for today. So I'll turn off the imbalance. I'll turn on the market profile. I'll go to a higher time frame because that will give us a clear picture in terms of what happened in the market last time. So these are the 30-minute sessions. So, and we are looking at, this is 5th of June data. So when we look at the chart, we are seeing that the most of the orders that got executed were between these area. So if we mark this again, and then we'll go back again to the candlestick chart. So I will again move to the candlestick chart. And I will turn on the candlestick. Now, when you look at this chart, I had marked this area based on the market profile. you can see that most of the time that was spent by market participants, whether it's buyers or sellers, was between this area. And this area is called a value area. Now, why do we call it a value area? Because there is a kind of an agreement between buyers and sellers that this is a fair price for a specific instrument, in this case, Nifty. So they think that this is a fair price of Nifty. It should be within this range. It shouldn't go beyond this range. And why do they think so? Because buyers and sellers have an equilibrium at this price. And that's why we can see that most of the time the market has spent within this area. If we go back again to the market profile, yeah. So, and similarly, if you look at the previous range as well, it is within the same range. So, market was actually consolidating within this range before deciding what to do next. Now, what is market profile? So market profile shows us these letters that you see in the picture. This is also called a time price opportunity chart, wherein you see a blocks. These letters are nothing but a blocks of each of time frame. In this case, it's a 30 minutes. So 30 minute, this block is of 30 minutes, and how much time was spent by market participants, whether it's buyers or sellers, at this particular price is reflected in time price opportunity chart. And in the middle, we see a longer line, which basically shows us that markets participants spent most of the time at this purple level. So 23, around 23,470, 75, that is the level where market participants thought that this is the ideal price of an instrument or the fair price. So now what we can use market profile for? So market profile can be used to mark key levels like support and resistance to identify where the market will have inflow of buyers or sellers. So what we will do is now this market profile, if you look at both the profiles, it's in the shape of D, right? It's kind of a D shape. This is an ideal market profile. There can be a different market profile. For example, this is not an ideal D shape. It's kind of a double D kind of a shape, where first D is formed here, second D is formed here. This is called a double distribution. Now what we will do is we will use market profile to mark key levels and see how the market acts around those key levels and how can we take a trade in Nifty. Okay, so this is market profile. Now when two market profiles are intersecting with each other more than 50%, we can combine both of those market profiles. So what I'll do is I'll merge them so that we can get a clear picture of what are the key levels. So what I'll do is I'll merge it, merge profile to left. There's an option when you right click on the market profile, last market profile. So I merge both of them. Now what are the key levels that have been identified here? So this is one of the key levels, and I will mark it as value area high. This is another key level. I will mark it as value area low, and there is a third level, which is of the purple line. That is our point of control. Now I will move back again to a candlestick chart, and we will look at how does this look like. Okay, what are these levels and how do they work? So as I previously mentioned, this is a fair price of Nifty that participants thought that should be paid, and this is the level where maximum participation took place. Value area high is nothing but a kind of a area where the sellers takes over. Sellers think that this is not the ideal price. They'll start selling, and here at the value area low, the buyers will start activating that. They think that the ideal price should be this, but it is at this price. Let's buy. So value area high and value area low is like a so when you say the peak of value area and bottom of value area, and these acts as support and resistance. So when the market price comes near this area, which is value area high, you will see selling activity accelerated. When the price goes towards the value area low, you will see that the buying activity is accelerated. And the reason is they want this price to be contained within this area, which is a fair price. Okay. So this is one level that we have marked. What we will do is we will continue marking these levels, because today market has opened gap down and it is trying to recover from there. So we have to identify what are key levels around the current price. So we will go back again to the market profile. Okay. What we will do is, this is one level that we have marked. We have another key level here, and even these two profiles are overlapping with each other more than 50%. So we can merge both of them together. So let's merge them, similar to what we did last time. Here also we have identified few levels, and we have to consider the key levels only. We don't go with the levels that have been previously identified or marked by the chart. We have to see what is the perfect D shape that is forming where the execution maximum order participation took place. So if we look here, we see 5 blocks, which is like average number of blocks within this chart, and here we see 5 blocks ending here. So this is the perfect D shape that is forming here. So what we will do is we will mark these levels again. I will mark this as value area high. Around this level, this will be marked as value area low. And we have point of control here. Okay, let's see if the levels. So right now, Nifty is around 23,250. Okay, so this is a level. So now this support level, okay, there is one level here as well, which we have not marked, but this may act as a resistance for Nifty. So Nifty, if price comes near this price, near this level, there can be accelerated selling activity. So let's mark. Let's see if there are any previous levels based on which we can mark the market participation. Okay, here we had previous activities. So let's look at this profile. Yeah. So here we have some levels. Let's mark them. This is value area high. This is value area low. This is POC. Let's update them. Value area high, value area low, and this is POC. Okay. What are the other levels? If there is a profile within this range, we are looking for that, because Nifty is currently within that range. I think these are two more profiles, and both are overlapping with each other. So what we can do is we can merge them and then identify the labels. And the labels that are coming up are this one will act as a value area low. I think this is the level which is, I think the value area high is kind of overlapping with the value area low. So let me see this one, and value area high and POC. POC is this. We can see the next profile also is there. Okay, let's go back now to look at the chart and what is happening with the order flow. So we will go again to the imbalance chart and we will turn it on. Now we have some levels that we can look at, and yeah, we have these levels. This is a 30-minute chart. If we go to a 3-minute chart, as I mentioned earlier, these are the levels that work like a magnet. POC is like a magnet. So prices most of the time tries to go towards POC, which is point of control, and maximum participation of orders takes around this level. And it also acts as support and resistance. So if we talk about this specific value area, this is the value area high, this is the value area low for this particular profile. Now the price will try to be between this area. And how the price moves between two value areas is how the market participants interact with each other. So what happens in the market is price always tries to move from one value area to the next when there is a move, because one side of the participants, for example, buyers or sellers, are dominating in the market, and that's how they move the price to the next value area. If we look at today's chart, there is no clear picture emerging as of now who is participating in the market. There were certain concepts that we had taken up in the last session. I will take it up again just so that you understand what we are looking at. So on the right side, what you are seeing is the number of executed orders or quantities of the buy orders. On the left side, what you are seeing is number of quantities or orders on the sell side. And there is a difference between them. For example, in this particular candle, if you sum up all the number of buy orders or buy quantities and number of sell quantities on the left side, you get a total, you get a difference between both of them. That is called delta. So delta, if we look at the bottom, we see a number that is being updated constantly. It is called delta, and delta is nothing but difference between buyers and sellers. If we talk about this particular candle, we are seeing that the buyers are dominating in this particular as of now. Currently, the buyers are dominating in this candle because number of buyers or buy quantities are 7,000 more than number of sellers. Number of sell quantity that are there in this particular candle, 3-minute candle. And if we look at the bottom, there is a word written cumulative, which is CUM. Cumulative, that is a cumulative delta. What is cumulative delta? Cumulative delta is nothing but for this particular session or a day. If we look at Nifty, it started with this candle. And here, if we look, the first number shows minus 55,000, 55.84,000 sell. So number of sell order in this particular are more than number of buyers. And how much more? Minus 55.84. If you look at cumulative delta, that is also minus 55.84. Look at the next candle. The number of sellers, number of buyers increased in this particular candle, and number of buyers are more, 66,000 more than number of sellers. And if you sum up the delta of this candle and cumulative delta of previous candle, you get the total, which is like difference until this particular candle. So in this candle, there are 10,000 until these two candles. There are 10,000 more buyers than sellers. So this is what cumulative delta and delta is. And what you look at the volume. Volume is nothing but total number of quantities in this particular candle. So if we look at current, it's 4.16K. That is nothing but executed orders in this particular candle. So there are 5,000 as of now orders or quantities that have been executed. I should stop saying orders because we are talking about quantities, but it's a habit. That's why I'm calling orders frequently, but consider it as quantity. When I say orders, consider it as quantity. So there are here in this candle, we had seen that there were number of buyers more in this candle. Now it has turned to a selling. So we can see that selling side is currently dominating in the market. What sellers are trying to do is they want to bring the market down. But as soon as the market comes down, there has been some buying activity here. If you look at the delta here, there have been 54,000 orders against 910 selling, 910 selling quantity. So buyers are dominating here. But then when the price came around point of control, the sellers started dominating. So what happens is generally, this is called absorption. When there are at a key level, the large orders get executed and there is an imbalance formed. Here we can see there are 20,000, 11,000, 11,000. So these are imbalance orders, especially this one. So sell side is started dominating here. The number of sellers were 24,000 more in this candle. So sellers started dominating here. The price went down. Again, in this particular candle, we can see the buyers started buying activity. The price went up. In this candle, again, sellers are dominating. The price is coming down. So around the point of control, around the value area high, around the value area low, you will see there is a accelerated activity by buyers and sellers. And we have to identify which side is dominating in the market based on the order flow and that take a trade in that direction. So for now, what I'm seeing in the market, it's kind of a scenario where neither side is dominating. Currently, there is, you can see buying as well as a selling. Both are within this value area, and no one is giving anyone an edge to take over. So we have to wait for now. We have to see who will start dominating, and then depending on that, we can take a trade. So let's wait and watch what is happening in the market. I'll look at the chart. I haven't been looking at it. If there are any queries, I'll try to answer them. Okay, there are no queries as of now. Okay, we'll go back again to the chart. So drop in if you have any query, and I'll try to answer them while we are waiting.
Can I speak something?
Sorry, yeah, please go ahead.
Okay, the thing is, I'm an option buyer, right? And the chart we are showing is for the future. So we are getting the order data from Dhan for future contracts of Nifty, right?
So yeah, I will clarify this. So what we are seeing on this chart is not from Dhan. These are executed orders. What on the right side we are seeing, this is a depth of market that we are getting from Dhan. And this data is only from Dhan. It is not from all the brokers. Whereas if you look at the left, these are executed orders, and this combines all the orders in the market.
Okay, but I just like from wherever the order is coming, that's not an issue. I was just thinking, like, if I want to, I see here that sellers are more dominant right now.
Yes.
So I would have to input a put chart here as well, na, to see at what price the the put buyers are putting most of the orders, right?
You can, but it is not necessary. If you see activity accelerated in futures, you'll see that
Okay.
the option prices also move in according to that, because eventually it's a derivative of Nifty. Whether you look at futures or whether you're looking at options, they're nothing but derivative. And so if Nifty moves, even future moves and option moves, both of them moves in sync. It
Okay.
won't happen that the future is moving, but the option prices are not moving.
Okay. Okay.
So
Thank you.
that's why we are looking at futures, but the trade will be taken in options. So we have identified these key levels. Now, if we look at this level is around 23,250. As soon as the price is going towards that level, we are seeing that there is a heightened activity on the selling. The sellers become dominant as soon as the price is going there, right?
There.
So we have to wait and see if we see a heavy activity, or we can see a breakout of this level, then we can take a trade. Right now, we see as the price went there, we saw that there was a buy order that had been exhausted by the selling, but we don't see imbalance, higher imbalance on the left side. When we see multiple selling activity here on the left side, for example, here we can see imbalance here, imbalance here. When the imbalances are stacked, like we can see 3 or 4 imbalances, then we can see that the sellers are becoming aggressive, and then we can take a trade in input. Sorry.
Okay.
Okay, so right now we are just waiting and watching. And why are we waiting? I'll tell that also, because there had been heavy buying here at this level. If you look at this candle, there had been heavy
Yes.
imbalance formed on the right side. The number of buyers had been heavy around this level. So we will watch out these level, especially I will mark this level and see how the price reacts around this level. If this level is broken, then we can think that yeah, selling is accelerated, and now we can take a trade on the put side. Okay, I'll take another question that is there. So take a trade only after the breakout, and do you go with option buying if it breaks out? Yes, we will go with options only. We are not trading in futures. So you can see that sellers have started dominating here. You can see multiple imbalances being stacked here. So the selling is activated. Now let the price come at this level. What it does around this level, let's wait and watch, and then take a call what to do. This is so in the market we become impatient. So when we are in the market, we are emotional. We want to take a trade. We want to earn money. No one like to wait in the market. But ideally, most of the time, if you want to be a disciplined trader, most of the time you should be waiting, and least time you should be trading and executing or monitoring your position. Now let's say we saw these 3 imbalances. There was heavy selling here. There was heavy selling here. Now we took a put trade. Take for example, we had taken a put trade. What would happen to that put price in this candle? Your stop loss would be hit. What I'll do is I'll also open the option chain. Okay, let me do this. Let me split this screen and open the option chain. Okay. Yeah. You're able to see the Angel screen on the right side, right? Angel 1 screen.
Yes, Nehal.
Okay. Okay. Just trying to see if we can catch it. Okay.
The Angel One screen is not visible.
Is it? Okay. 1 second. Let me try to do that. 1 second.
Yeah.
I'll try to share the Okay, I think that's because I am using split screen feature of the Edge browser. I think that's why it is not visible. Is it visible now or still not?
Only the Go charting screen is visible for now.
Okay, that's fine. Let's wait for now. Let's see what is
You can share your entire screen, then it will be visible instead of trying to share one application.
Okay, 1 second. Let me do that. What I'll do is I'll share my browser screen completely. Okay.
Yeah.
I'll log into probably my Fires account because the Angel one is not giving the clear picture of the option chain. So let's go here. Okay, so we are you're able to see the Fire screen, right?
Yes.
Okay, so the price is around, so currently the ATM is 23,150. And if we go back to this chart, sorry, it's what the price is now. Yeah, 23,200 is the ATM now because price has crossed 175. And this is the future chart. Now you see the buyers are becoming aggressive here. The buyers have started executing heavy orders here in this candle near 23,250 level. If it breaks out above this level and sustains, then what we can do is we can take a trade that will span across until this level, which is 23,310. You can see selling has completely gone in the market. On the left side, you see zero prints. There are no sellers in the market in this particular candle at this particular price. So the buyers have started dominating here. You can see the breakout has happened. We can take a call. Let's say we have taken a call around this price. Ideally, we should not. We should wait and watch wait for the pullback and then take a trade. But let's say, for example, we have taken a buy side on the 23,200, which is running at 130 as of now. Let's see what happens to that price. Let's see what sellers are doing. You see, sellers have come. It was zero earlier. Now 3,000 sell orders have come. Let's see what happens to this one. And then we will look at the option prices. Okay, the price has closed above this level. We should see a continuous momentum on the buy side if the price wants to sustain. In this candle, we are not seeing that. You see, the buyers have gone away. The sellers have started dominating. There is an imbalance on the sell side. So the price will again try to come down. It's can be a kind of pullback. Let's see. The number of, we have to keep an eye on the delta. Right now, the delta is negative. So sellers are dominating. Let's see if the buyers overpowers them and then tries to bring the price up. then we can see that we can take a, so let's say we'll look at the price of, so the price is down right now from 130, it's 127, 128. Still the delta is negative. No clear buy side domination continuing. And that's why I said we have to wait rather than taking a trade. We have to wait. Now let's keep looking at what happens to the price. Price has again come to 130, 133. Now we can say that buyers has dominated. If you look at the delta, it started becoming positive. The number is increasing. Now, if we had taken a trade, now let's say we take a trade around the same price, let's say 134. Now let's see what happens to that price. This momentum should sustain. And the price has closed above this level, so ideally it should sustain. And the price should go towards at least 300. See, the number is constantly sustaining, 9,000. From 4,000, it jumped to 9,000. Let's look at the price of option. It's still not accelerating. The VIX may be dragging the price. So from 134, it has come again to 130, 131, 132. Let's see what is happening here. The delta is going down again. From 9,000, it went to 7,000 now. The sellers are selling. Buyers are also trying to sustain. Let's see what happens. I'll zoom in a bit so you can get a clear picture of what is happening. There is no imbalance in this particular candle, or clear imbalance, I would say. There is a slight imbalance on the left, slight imbalance on the right, but there is no clear imbalance with a big number.
So how do you combine with the price action? Because right now the day high is broken.
Yes.
So there is a breakout on the day high.
Yeah.
Right?
So ideally there should be a, this was a kind of a pullback, but then pullback is not giving any heavy imbalance on the buyer side. So still after this candle also, we should be waiting that, yeah, right now the price is not doing what it should be doing. Ideally, the price should come back and then there should be heavy imbalance on the right side, and the price should move up. That's not happening. If you look at the option price, it would have come down heavily. Yeah. If you look at 23,200, the price has come down to 122, 123. So this trade would fail. Let's see. This is also a pullback. Let's see what happens here. There is an imbalance on both the sides. There is no clear winner here in this candle. Ideally, there should be a next candle with a heavy buying volume, buying side imbalance, and the price should move heavily again towards this level, break this previous high. Then we can clearly see that the call side is winning. But as of now, it's still not clear. We can see cumulative delta is still increasing. If you look at the cumulative delta, it's improving. There was 7,000 delta here. There was 3,000, 4,000 delta is here. It's improving, but there is no clear winning on the buy side yet.
For Nifty, is there any value of the delta which is significant, where you say that now the delta is significant and the direction is very clear?
When you see a heavy volume, for example, in this candle, we saw a heavy volume of 55,000 quantities, and there was a kind of 28,000. So 50% of the volume was on the buy side. So this is a significant number. Let's say if this number was around 35,000 or 40,000, then we would be thinking that yes, clearly buyers are trying to overpower sellers. But then we will still wait for the next candle to see what is happening, because even after the heavy buying, the sellers can dominate. They can overpower the buyers and execute heavy sell orders and take the price down. So we are still waiting. We are seeing the imbalance on the buy side has gone, and the sell side, sell side. So both the sides imbalance has gone. So they are still in a balanced area. The price is still not dominating in one of the sides. So let's see what happens in this candle. The good thing is price has sustained above this level, which is key level. So if it goes below this level, then we will be kind of in a trouble. You can see there are two sell side imbalances. The price is trying to go down below this level. The buyers should jump in now. If they want to sustain, they should jump in now. If they don't sustain above this level, then this will be a failed trade. The price has gone already. I think the price has gone from 134 to 120. So it's kind of what 134. So yeah, around 20% down move has come, and we can see that sellers have started dominating in this candle. Price has been rejected from this level. No buying activity, no imbalance on the buy side. Yes, price is trying to go down again. You can see heavy selling activity. Only this thing, this level, which was like heavy imbalance on the buy side, this has been now exhausted. All the buying that was there in this candle, because of which we thought that we could take a trade, has been exhausted now. They have been absorbed. Yes. So sellers are active in the market. You can see buyers have gone away. They are not there in the market. They are not participating. They are letting the sellers take over. So let's say let the price pull back to this level again and see if it pullbacks, and then we can take a put trade and see what happens to the put price. So buyers imbalance formed here, but it's not significant because it's at the bottom of the candle. We see sellers are still trying to dominate, and buyers came again. Let's see. They should defend these candles. There was an imbalance earlier here, so these are key levels. They should defend in this area. If they want to take the price higher, they have to defend this area. If the price goes below this area, then sellers will dominate them and the price will go down. We see buying is there, but the delta number is very low. Sellers can dominate any movement. There is no activity, heavy buying activity at this level. So we still don't have confidence in on the call side as of now. See, price has gone down again. Let it cross this level, and then we will look at the put side. And I think the next level can be targeted below this is this area, and below this area we can target this area. Let's see. Buying coming again, selling going. It's a kind of sideways market where buyers and sellers both are trying to overpower each other, but no one is emerging as clear winner. Ideally, we should try to avoid trading in these kind of market, especially as an option buyer. What I will do is I will add a VWAP here. Okay, so this will also give us a kind of another confluence of price. We can see that the price has come near the VWAP and it has tried to come up again. And throughout the day, if you look at the throughout the day, the price has tried to sustain above the VWAP. I will update the settings of VWAP. Where you can see a single VWAP. Yeah. Price has sustained above VWAP. So ideally, the buyers should be dominating, but we don't see a clear picture yet. As of now, the sellers are dominating. If you look at the cumulative delta, price again moving above the key level. Not sure whether we will get a proper trade today or not, but let's see. Let's see who overpowers, and then we can think. This is a kind of sideways market. In this candle also, there were, though the candle closed in green, there was good volume on the buy side as well as sell side, and sell side dominated, but the candle closed in green. This should be clean. And there was heavy imbalance on the buy side here. So this area, there should be heavy buying here. If they want to continue to sustain the price. Price is again below, yeah, it's trying to move up. Let's see. There is an imbalance on the sell side here, 14K, significant imbalance. No imbalance on the buy side as of now. So here what happened was the buyers were trapped. So when the price went down, most of the buyers, especially option buyers, if they had taken a position in call, by looking at this candle, their stop losses were hit here around this level when the price came down. If you look at cumulative delta, it's going down. Candle is going up. There's a clear, this is called delta divergence. The price is going up, but if you look at the delta, it's negative. If the price will move on the buy side, it will move very fast. So as I mentioned, POC is called point of control, which is within the value area. This is the area where buyers and sellers think this is the ideal price of an instrument. That's why price keeps hovering around this area. which is POC. They think this is the ideal price, 23,250. They don't want to sell lower than this. They don't want to buy higher than this. It's a wait and watch situation. Let's keep waiting. Let's see when significant imbalance forms on the either side, then we can think of taking a trade. We have to be very cautious if we take a buy trade above this level because the delta is negative. It can trap the new buyers here, and again the price can come to on the downside. We have to be very careful if we take a call side trade here. Again, delta is positive in this candle, slightly positive, I would say. No imbalances that have been seen. Last imbalance was on the sell side, so no clear picture yet. If you look at the option price, the 23,200 is now around the same price, like 122 that was there earlier. Heavy selling on the left side, imbalance is formed. Again, rejection from the same level, 23,250 point of control. This level has to be broken. If sellers have to dominate, they have to break this level. They are trying to, let's see. And the price should also go below VWAP. VWAP is also a kind of a level where maximum participation takes place. So we have to be careful. The price has to sustain below VWAP. If it goes down below this level, it has to sustain below VWAP, and then we should see some imbalance on the sell side for taking a put side trade. On the buy side, we had taken kind of a one trade when the price was around 134. It failed. The price came down. Now we are seeing, we are waiting if there is a clear trend that is emerging on the sell side. Price again tried to move up from this level. If you look at this level, how many candles have gone up from this level? 1, 2, 3, 4. Whoever bought at this level, they are still trapped. In this candle, whoever bought, or probably in this candle, they both are trapped yet. They haven't found their exit. This is a resistance. Next resistance after the 23,250 level. So price, until it breaks above this or below this, we shouldn't be taking any trade. We should be just waiting and watching what the price does. Candle closed in green, but still sellers dominating. Imbalance on the sell side, imbalance on the sell side, imbalance on the sell side. In last three candles, we have seen that all the imbalance is on the sell side. Delta is also supporting. Delta is also negative. Let's wait for it to break this level, sustain below VWAP, then we can see. The next key level to watch out for is this one, because there was a heavy buying here in these two, heavy imbalance on the buy side here at this level. So it is possible there are pending orders that get executed around this level. So we have to be careful. Even if we take a trade here, it will not be a big trade. It will be kind of a scalping trade where you just take around 23, so around 20 points. I will update the VWAP. So VWAP is nothing but a kind of standard deviation in the price, volume weighted average price. We can add two more deviation, VWAP level 2 and VWAP level 3. And we can see where those are. So this is first standard deviation, second is here. And we are also, this also acts as a kind of resistance. Price gets rejected from this level. It has happened here. You don't see any heavy volume similar to this candle. The volume is very low. The participation from buyers and sellers, it's kind of indecisive as of now. So if you look at probably the candlestick chart, the candle that has been formed, let's look at that. And we go to the higher time frame. For example, we can look at the daily. It's not a, I wouldn't say it's a indecisive candle as of now, because the wick on the both side is similar. Wick on the lower side is bigger than the higher upper side, and the price is trying to go up. Candle is green. So ideally, the buy side should dominate, but they are not showing domination in the market as of now. Imbalance.
Can one say that, when such a scenario is there,
Yeah.
one can do non-directional strategies? Because there is no clear
If
direction.
If you are an option seller, you should be looking at the non-directional strategies in this scenario.
Sure.
And one of the reasons this kind of consolidation happens is after the big move. So let's say if there was a heavy move on the upside here, then there was a consolidation. Now there is a gap down, and now again there is a consolidation before market participant decides what to do. So this is kind of indecisive phase as of now. as soon as the price is trying to go up, sellers start dominating. Delta is continuously negative. Not a single positive delta after this candle, which was at the top of the chart, or today's high, near today's high. So in this type of market, option buyers will make heavy losses, because if they take a trade on the call side here, they will incur loss. At the price come down here, they'll take a put side trade, they'll lose here, they'll lose here, their stop loss will be hit here. So they should avoid this type of a market. Where is it? It's a range bound kind of market. There is no clear trend emerging.
And this order flow works only for the index, right? It's not applicable for stocks. They don't have the data.
It is applicable for stocks. So let me show you on.
Can you show Fortis if you can?
Yeah, sure. 1 second. Okay. Okay. If you look at what is happening here, this is 1 minute chart. I'll move to 3 minutes now. And I'll change some settings here. Okay. So if we look at,
I mean, can you just tell what settings were changed so that, if we have to do a stock, we have to follow that?
yeah, so what has happened since morning? Let's look at that. In the first candle, the buyers dominated, continuously dominated until this candle. The sellers started selling. If you look at the volume hasn't been significant on either side until here. Here there were 1.29 thousand more buyers than number of sellers. The cumulative delta has improved to 5.41K. Again, there was some selling, did not sustain. And I would say still the price is moving up, but we don't see a clear trend as of now. I wouldn't take a trade around this level. So if around this level, the price did not sustain, it came down heavily. It can come down again if the selling accelerates here. Until you see a similar candle with a heavy volume, heavy delta on one side, you should be waiting.
Okay. So basically, one is not enough. I mean, that was the indication, but you have to see the follow-up.
Yes, you have to see a follow-up. This has to be, let's say, if you mark this as a key level from where the rejection happened, the price has to sustain above it.
Okay.
Sir, this volume profile thing, like there was a table below, no? Yes, there is a table, yeah. So this can be seen in any other platform as well.
You can actually see it in TradingView as well, but that doesn't give you the actual data. It tries to aggregate some of the information, but it's not. I wouldn't say it's accurate data similar to what other platform offers, like Go Charting or VTrender. Those platform offers you the actual data.
Okay, this is basically volume only, right? This indicator is basically volume. No, delta bars.
So there are three things here. The first row that you see is a volume, which is number of buy and sell, total of number of buy and sell quantity in this particular candle. The delta is a difference between number of buy quantities minus number of sell quantities. In this case, number of sell quantities are more, so that's why the price is negative. At the bottom, you see is for the particular session. So let's say we are trading, looking at the session today, which started at 9:15. So throughout the day, the sellers are dominating as of now. So price again is trying to go below this level. Let's see. Again, the buyers came, price not going below this level, even though there is a sell side imbalance. Completely sideways market. Option buyers, not option buyers day as of now, as until now. That can change if there is heavy orders from either side, but as of now, not an option buyers day. Nifty is in consolidation mode today. Even though delta is continuously going negative, we haven't seen imbalance on the heavy imbalance on the buy side since this candle, 2.6K against 650 sellers. Sorry, there was a slight imbalance here, but was of no significance. Delta again trying to turn positive after a long time from this candle. From after 10 a.m., it's 10:30. After half an hour, it's trying to turn positive. Imbalance we can see on the buy side. Price trying to sustain above key level, point of control. Even if it breaks this level, I will not have confidence to enter into a call trade. I will still wait for price to pull back into this level. Again, reject the sellers. Price should go up. At that time, I would get a full confidence in going in a call trade. It is always better to take least trade, but take an accurate trade. Because even let's say if it breaks here, you take a trade, what would be your stop loss? It would be down here or here. These are the swing lows. It's a unfavorable risk reward ratio. If the price breaks above this level, pulls back, then you can take a trade with a stop loss around the POC. Your risk reward ratio would be favorable.
Nifty is again seems to be breaking out. I don't know. Is it
Yes,
showing
it
any-
is trying, but I don't see huge numbers on the buy side. The numbers are very limited. I don't see a good volume. If you look at the volume, it's 13,000. It's kind of an average volume. it should be around, let's say 30, 50, 40, 50, around this. There should be a volume around this levels if it's trying to break out. Low volume breakouts has high chances of failure. So those ideally should be avoided. Okay, we can see imbalance on the buy side here. It is possible that the price directly moves up this level, but it's better to not take a trade and avoid that trade. Imbalance is gone again. Selling again came here, trying to reject from the same area. Let's see. Let's keep an eye on the delta, 5.27K. Volume increasing, 7,000, 10,000. Let's see. I would still avoid this trade. I would not take a trade here. I would let the price pull back in this level, get it rejected from this level on the upside, and then probably think of a call side trade. I would not take a trade right now.
No, but didn't that trade rejection has already happened before? I mean, it was trying to break out and then there was a pullback and rejection from that level.
Yeah, but it should get rejected on the upside for the rejected for the sellers, not the buyers. Here it got rejected for the buyers. Whoever bought, for them the price got rejected. Here what I'm looking for is it should be rejected for sellers. So sellers should be absorbed around this level when the price comes back to this level. $10,000 delta, not a significant activity on the candle side. If you look at the candle, it's kind of a doji candle, indecisive, no imbalance. The most important thing is imbalance. We don't see any clear imbalance on the buy side. Even though there was buying, there was selling. Buying, there was selling. Again, trying to reject the price. Let's see. So non-directional option sellers would have made a good amount of money by now. Since morning, let's say around this price, let's say if they had taken a trade around here.
No, so for the non-directional, it is about not much. I mean, it is about 300-400 rupees per lot so far on the ATM since 9/16.
Yeah, but still, if they have multiple lots, let's say 10 lots, because sellers would not, I mean, professional sellers would not trade with one lot. So ideally, they would trade with, let's say, 10 lots minimum. So they would still make like 3,000, 4,000 by now. Price trying to reject again. The delta is still positive. So let's see if the price really gets rejected or we see any reaction from this level. Delta is improving. The price is near day high. So high chances of rejection from this level again. It had rejected earlier and it may reject again here. Though it has sustained above key level, which is 23,250. There was good buying here. In this candle, it is not there. The buying was at the bottom, not at the top. Again, trying to reject the price, reject the imbalance on the sell side again. So if the price gets rejected from this level and below 250, what scalpers can do is they can take a put side trade until this level. It's a very short. So this is kind of a sideways market where option buyers can do nothing but scalping, small scalping, few points. Ideally, they should avoid such market completely. But traders in us usually don't prefer to stay idle in the market. Delta again positive, improving imbalance on the buy side from this level. Price is near high. Delta improving. Even if you take a call here, let's say around 23,285, you will get a trade of, let's say, 15 points. It's kind of a scalping trade. Yes, there is a significant imbalance on the buy side right now. Let's see. One got exhausted. Let's see the second imbalance. Sellers exhausted the imbalance on the buy side here. Price is coming down.
Can you explain what do you mean by that? I mean, can you just explain when you say sellers exhausted?
Yeah. So sellers, so there was an imbalance here on the right side, on the buy side, 6.4K. There was low number of sellers against these particular buy orders. There was low number of sellers. Then the sellers came, sell order came, and then it exhausted some of the buy orders. So the color, yellow color that you were seeing, it has turned into green. So those are exhausted orders. So the buy orders that were there, that have been exhausted or absorbed by the sell orders or executed against the sell orders.
So imbalance shows in which color?
Imbalance is in yellow color.
In yellow.
And there is a setting for that. Right now, the imbalance that I have marked is 3 times of or 300% of the sell side. So unless there is a difference of 3 times between sellers and buyers, it won't show as yellow. So if you look at this candle, you look at the sellers 585 and number of buyers 8.2k. So the difference is more than 3 times. In this candle earlier, the buyers were more, the sellers were around, let's say 1.2k or 1.3k. Then they increased, the number of sellers increased. They exhausted some of the orders that were pending here. Even though there is a good delta here, no sustaining, the price is not sustaining. Price is trying to come down. Imbalance on the sell side, slight imbalance on the buy side, but it's not of significance. For the very heavy volume as well here in this candle. Low confidence candle. Price again trying to come below this level. I'll turn off my camera for a moment. Okay. Again, price trying to get rejected from the same level. Tried to go up, rejected again. Imbalance on the sell side. Looking at the cumulative delta, still negative. Even though price is going up, the cumulative delta is not improving drastically. We also don't see a heavy sell side orders too. If the sellers want to dominate, they should repeat orders similar to this candle, probably similar to this candle. You see the difference between volume and delta. The least volume is there. You can see that they are trying to dominate. It's 10:46. We have been looking at the chart since 9:15. Nothing significant that has happened. It's a completely sideways market. Though we saw a few concepts, we looked at the market profile, we drew the key levels. But in terms of the trades, nothing significant has happened. Price most of the time has spent between this range. Since 9:50, the price is within this range. let's look at the higher time frame while we are waiting to see what it shows us as on a higher time frame. So let's start with daily time frame. So daily time frame, we see there was good buying at these levels, even here, but it hasn't sustained. There was a good selling here, good selling on the bottom as well. Price still not sustaining. If we go back to early chart, we can see there was heavy imbalance here on the buy side. The only imbalance, there were multiple imbalances on the sell side. 1, 2, 3. Price tried to go up, did not sustain. In the second candle as well, there is no imbalance, clear imbalance that we can see here. Price still between the upper and lower range. Looking at the delta, if we look at the early delta, negative, early cumulative delta, both negative. The only thing in this candle that we can see is the delta is not heavily negative, similar to first candle. So even in the first candle, even though price tried to go up, there was a heavy negative delta. Here it's like of 200, it's 7,000. So around 10, if you consider 20% negative delta as of now. If you go to 15 minutes, sell side imbalance we can see clearly. There was slight buy side imbalance here, buy side imbalance here. Nothing clear as of now. Moving back to 3 minutes. Sell side imbalance 11,000. On the buy side, no significant order. Price may try to go down unless there is a heavy buy activity. The data is low confidence for the trade. Very low imbalance on the buy side. Ideally, when similar kind of candle happens where there is a imbalance on the selling side, ideally there should be a very low buy volume, and then the price should keep going down. If we want to get a confidence that the market is going down, but right now there was like 2,000 buying here as well. It's an indecisive scenario as of now. I think most of the traders in the meeting, they would be desperate to take a trade. But to be frank, there hasn't been except this candle which had a good imbalance on the buy side. There hasn't been a single candle since then, which would give a confidence that either buyers or sellers are dominating. Here we thought that the buyers would dominate, but the price got rejected. But since then, there is no clear trend that has emerged. Rejection, 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 rejection. Price is going up. Delta not significantly positive anywhere. I'll show you what, while we are waiting, I'll show you data of previous days where there was heavy activity. So if we go back, let's say to Friday. So let's take this. Let's start with today. So let's go back to here. Okay. Look at the numbers at the bottom. The numbers have peaked around this area. There was 93K, 99K, 116K, 113K. Similar to, if you go back to Thursday, 128K was the peak. If we compare it to today, what is the maximum delta that we have bought so far? It's 63K. So there is very low market activity today. And that is one of the reasons for low participation or low or consolidation in the market.
Is it possible to check the last expiry so that we can see?
Sure. You check. Last expiry was Tuesday 2nd, right?
Yeah.
Go to 2nd. Yes. So this is 2nd, right? Yeah. So you see here the volume peaked 179, 180, and around 133 itself. Right now we are around the same time, but if you look at the cumulative delta, it's just minus 48K. It peaked around 1121. You see the delta, cumulative delta 294K, 296K, and then it gradually came down, again tried to pick up. And when the day closed, I think it was around, yeah, you see the heavy activity here. This was a significant candle. You see heavy activity here. The cumulative delta peaked to 818, 905, 907, 919. This was a peak, I guess, 919. Yeah, no, there was 944 as well. So around 325, there was peak activity there. And if you compare that to today, which is like, even if you look at Monday, let's look at the 1st of June. Look at the data. On 1st of June, it's 676K, which is Monday. And look at today. Today is also Monday. 50K. very insignificant. So even through cumulative delta as compared to what you can do is when you get access to similar tool, what you can do is you can look at the cumulative delta of various days, average them out, and see on which days how much activity and on average takes place. And then you look at the current day and see whether it's significant compared to those days or not.
Since the primary strategy involves monitoring the delta,
Right.
have you tried actually checking the strategies based on the delta only? For instance, if it breaks out the previous delta value.
Yeah, so previous delta value actually doesn't matter because if you look at here, right, the delta value is 10.66K. There was a kind of a breakout 12.87K. But if you look at the next candle, the price gets immediately rejected.
Right.
So only using delta would not give you an edge. Ideally, you should be looking at the imbalances because imbalances will show you who is trying to dominate in the market. Here the sellers are dominating. We don't see any buying dominance as of now. Even though candle going up, delta is positive. Ideally, this candle should have blasted until this level if the buyers are actually dominating in the market, but they are not.
So if we actually look at the delta and the imbalance alone,
Yes.
can we actually predict the direction? The reason I'm asking is Go charting supports Lippy,
Yes.
and we can create a custom indicator and create a webhook
Yes.
that can trigger an alert, and
Yes.
we can automate the complete strategy, right? So
Yeah.
if we can actually predict the direction based on the imbalance and the delta alone, I mean, is it possible to predict the direction?
No, not with those two information as well, because you will have to take into consideration key levels and
Okay.
what the market does around those key levels.
Right.
So, let's say there was a kind of a breakout here around the key level of 23,250. There was a significant delta, significant volume, but then still it failed. So you have to keep in mind that this level will act as a resistance and support.
Okay. So there is no way at all to automate this strategy at all, right?
You can, but then you will have to take into consideration multiple things. You will have to first understand all the concepts of order flow, like when the absorption takes place, when there is a delta divergence around key level, when there is a rejection around key level. All those concepts you combine, and then you can you can make a script. But you will have to consider all the concepts that are there. Ideally,
no, actually the concept is fine, but the problem with the Go charting is we can actually create a Lippy for order flow, but not for market profile or volume profile. So
yes,
we have to manually mark those levels.
yeah, that's
So,
an issue.
right.
Yeah.
Thank you so much, sir.
No problem. Thank you. No clear detection. It's 11. We have been sitting since 9:15. No trend emerging in the market. Price still sustaining around these levels, 23,250. I think we can take few questions if anyone has, and we can call it a day.
Yes, I think the market is not giving us the opportunity to take a trade live in the live session today.
Right.
Correct. And like we've been waiting for 2 hours. And of course, if anyone has any questions, they can, ask directly to Snehal, and also they can drop any questions in chat if they want. Snehal can pick them up right now. Before we close off the session in maybe next 15 minutes, we'll wait out for the candles to play out for the next 15 minutes to see if something interesting happens. Meanwhile, if anyone has any questions or want to ask something to Snehal about his workflow of taking trading decisions, then definitely.
So we can see the price is near the around 10 a.m. high. If you look at the option prices, we had looked at this call price 23,200 call price was around 134. It's still around the same price, 130, 129. Two imbalances in this candle on the sell side.
Do you also consider the open interest of option chain on those levels to interpret?
Ideally, I do not. I keep looking at the key levels and how the price is reacting around that level. I normally do not look at the open interest, but there are various strategies around open interest that can also be combined with order flow. So it would be a confluence. So when you take a trade, you will have a better confidence that along with the order flow, the open interest confluence is also there.
Right. Because what I'm trying to interpret is, like, let's say if the actual key levels also matching with the open interest,
Right.
then that could be act as support or resistance, right?
Yes, yes, they would.
Yeah.
If you look at the open interest as of now, let's look here. The OI is 1.09 crores on the call side, around 23,200. If we look at the OI on the put side, it's 1.57 crores. So the OI is saying that the price should go up. Let's say let's look at 150. So here also you can see on the put side there is significant OI as compared to the call side. So ideally the price should be going up. That's what the OI is saying.
Right.
But if we look at the chart and order flow data, the price is trying to go on the upside. We don't see a significant downside. If we look at the chart since morning, we don't see that we see heavy selling activity that has gone below this level and then sustained. We see there is continuous buying. There. Sorry. Yeah. So price came again. There was buying. Came again. Buying. Buying. Came again. Buying. So buying is sustaining, and it's if you look at open interest, that supports that. So ideally there should be a buying, but it may happen later in the day. We are not sure. And open interest keeps changing, so we have to keep looking at the open interest data throughout the day as well, that whether the open interest is also changing. Here I think it was 51. Now it has reduced to 49. So we have to keep looking at that if we want to confluence both of them.
No, the question was again for the automation, because yeah, because if we can create an algo that can easily monitor those things and come up with a strategy.
So I am actually working on one algorithm on Nifty. Actually, I have worked on an algo on crude oil based on order flow imbalance, but that's on a very limited market depth. So I'm still testing it out.
But the problem is the brokers don't actually say the executed order. They're only giving bid and ask. I've tried with the DAN and the FIRES for 50 depth, but it's not a proper order flow like how we get in go charting.
So I failed to get any profitable day out of that algo. So I have put it aside. I focused on crude oil, and it is still kind of a break even as of now. So if we look at the only five depth market data, it is still profitable at the end of the day. So,
Right.
but the charges are killing it.
Yeah.
So I am still trying to find out a way if I can make it profitable. So, but yeah, you can use market depth, but you won't get the accurate data similar to platforms like Go Charting or VTrender. So that's an issue. I was talking with someone who is working on similar platform to Go Charting along with the market profiles pre-drawn. So I'm discussing it with him if he is coming up with that platform, and if there is something that can be automated on top of his platform. I'm still looking out for a way.
Yeah, that would be really great.
Yeah, I'll keep posted in our early believers group in case that platform is ready, and if he starts giving early access or something, I'll keep you updated.
Sure. Thank you.
No problem. So completely sideways market between these level. I think if we extend it to this, around 80 to 90% time is spent between these two levels. If we encompass these two levels, since morning, 80 to 90% time is spent, or more than 90% time is spent in these levels, within this zone.
Hello?
With no clear trend emerging.
Hello?
Yeah.
So I wanted to talk to that guy who was who was discussing about to make this an algo. What was the name?
Hi.
Siva. Yes.
Okay. Shiva, I guess you are a trader, right?
Yeah.
Okay. So if you want a systematic or algo-based trading, right?
Mhm.
So I would suggest a platform. It's an Indian security broker. The platform is Definage.
Okay.
Give it a try. Have some look at their platform or the systems they are building or the systems people are trading over there. They are good in that.
Sure, I'll look into it. Thank you.
Prashant is the owner of that platform. They have developed.
Prashant, sir. Yes, Prashant.
Yeah, yeah. So, and he's very good a friend of my friend, and so he has developed few applications. One of them is called Momentify.
I'm
And
about to start with that, Momentify.
yeah, so yeah,
Actually, the problem is like all those demo videos are in Hindi. I don't know Hindi, so that's the problem. I couldn't understand those platforms.
right. I think you should.
That's a thing, but I really appreciate their effort. Like I saw their platform maybe like 4 years back, but I never see any advertising or anything from them. Now
Right.
suddenly I got a video on my feed about Momentify, and it really amazed me how that thing is like. They properly give you the best back. They properly give you the how to make the strategy or how to backtest it. You can backtest it on like days, years, and all, and you can show you the drawdown and all. So you can have a conviction over there. If you know how to make a system, then you can implement it there and automate it automatically. It will done automatically.
Yeah. Actually, the creating of automation or backtesting is not the problem. But whatever I tried so far, like intraday is not working out after all the charges and those things.
For
Only the
intraday,
swing.
if you are if you are trying, drop me a message. I don't know what is my name in the group. You can ask me like Vikas is my name. I have
Sure.
a I have a plan. Right? Have you heard about Trinker? Trinker.
Yeah.
So the person who owns Trinker, I know him personally.
Okay.
Right. Not personally, I have not met him, but I have his number. I talks to him about my strategies and all. So I gave him my strategy. In the
Okay.
first look, he said like this is something we should test, but at the end he was not able to test it. It was an intraday scanner. It will give you some stock from. Let's have this conversation later. Like this is
Sure.
a different meeting. Right.
Sure. We can take it up offline. Thank
Okay.
you.
Okay, I see there are no questions in the chat window apart from what we had discussed in the call.
Right. So
I just have understood, sir, that the yellow bars are imbalances.
Yes,
If there is a delta, like we are seeing a delta of green uh, in last 5 or 7 candles, then we can think market can go up, but it should also have a volume.
yes,
Else, it is only trapping, I guess.
yes. And also, when the market is trying to break out or get rejected, we should ensure that it is around the key levels of market profile. So nothing significant happened since morning. It's been, I think, around 2 hours now, from 9:50
yes,
to 11:15. No
My
clear.
yes,
thinking is, my thinking is this will go down. It is definitely inviting buyers, but the
Yes,
volume is not there.
but if you look at the option chain, it is saying that
It is saying
yes,
yes,
now
yes.
yeah, it is saying that the market should go up. So not sure. I'm still pretty not sure which direction it will take. But as a trader, what we should be doing rather than anticipating is go with the flow. So if market goes down, take a down trade. If market goes up, let's take an up trade. So that's the only thing we should be focusing as a trader. In my personal experience, that's what works for me. I don't anticipate that the market will go up or down. I go with the flow. If there is a data that proves that the market is going up, I take an upside trade. If the data proves that there is a downside trade going to happen, then I'll take a downside trade. Right now, the cumulative delta is negative, but the price is still sustaining. So it's still doubtful whether the price will go down or not. Okay, I think we can call it a day. Thank you everyone for joining. Probably we will have few more sessions in the upcoming days if the market opportunity prevails, and we will keep everyone updated on those dates. Nilesh,
correct. Yes. So thank you, Snehal, also for waiting 2 hours on the call. I think like very unfortunately market didn't give us an opportunity to trade today, but hopefully later in the day and later in other sessions that may follow up on option order flow and options